a few levels of support over here, and we also have these two up close candles, which is our accumulation block. This also overlaps inside of this area. So there's a few levels of support that I'm looking at to see if we want to send price back higher and above these relative equal highs, and ultimately this high up here. But this for me just looks far too clean. I do not think that they're going to leave this intact. If they are to run lower, I would expect it to reprice higher once again to really dig into that buy side liquidity and then go lower. But from the looks of things, in my opinion, I think this is just coming down to take stops, rebalance, find support, mitigate inside this accumulation block, and then really run higher again. If we zoom in a little bit, we do have this sell side imbalance. I want to see us get back above the consequent encroachment first, and then the premium high of this range. If we are to drop lower, which we can, there is a small volume imbalance which also nests inside of that weekly breaker. I would rather see this left open and act as a breakaway gap in all honesty, because it's breaking away from this range, and that would again indicate strength and potential upside movement. Nasdaq weekly time frame. So again, we have these three consecutive up close candles, which is our accumulation block. And inside of that accumulation block, we have this balanced price range. We're currently finding support above that. The buy side liquidity rests above these relative equal highs up here. And again, these relative equal highs up here. And if we go down to the daily time frame, the only thing I can see here is this imbalance where we could potentially dip into, clear the sell side liquidity, and then really move higher. I would prefer us to stay above this balanced price range and leave this again as a breakaway gap. This would indicate strength. It wouldn't still be the end of the world if we dipped into it, but then we'd have to get back above the breaker in order for me to have any conviction of continued upside movement. Now, going back to the euro dollar, so we can get into a little bit more detail. This is a daily time frame. Now, this is last week's price action. If we take this high down to this low, and we project one standard deviation lower using this as a fulcrum point, this overlaps with that 1.5 level that we had outlined from last week. So in close proximity, we get one standard deviation of 1.04957. So again, we would round that up to 105 big figure. Now, today we have seen us run through this level. Now, if we are running through a big figure level, I would expect volatility through that level. And that's quite significant. Looking at last week's price action from Monday through to Friday, this is how we can see it on a weekly candlestick. So we open over here, we run higher over here, and then we really have sell side delivery running through that weekly low where we had sell side liquidity resting under, rejecting off them lows and then closing over here. Looking at it on the 1 hour time frame. So again, standard procedure, we have Monday through to Friday delineated with these black vertical lines. Now we have, this was our daily order block, and this was our daily fair value gap over here. So on Monday, you can see how we were finding support on the opening price of that daily order block. And then we displace through it, come back up, and then reject that level, and then really push lower, leaving behind this fair value gap, which you can see that we traded up into on Friday. We consolidated on the rest of Monday, and then on Tuesday, we opened, dropped lower, clearing the sell side liquidity below this low, and then running higher, clearing the buy side liquidity above this high, and into this sell side imbalance that was left over on Monday. This formed our initial dealing range, and then you can see that we had a market maker buy model where we ran lower to go back higher, clearing the buy side liquidity above these highs and rebalancing in this inefficiency. I'm not going to explain dealing ranges here or the market maker models because I've created 2 courses for that. So if you haven't gone through those already, I would strongly advise it because it'll be much easier for you to follow these mentorship videos. I hope you can appreciate that. I cannot reteach how dense the material is every single time that I do a lecture, right? Anyway, on Tuesday, we have this high, low, higher high. We dropped below it, came back up to mitigate, and then really run for that sell side liquidity below that old weekly low. If we take the dealing range low to the dealing range high inside of the initial consolidation, and again, I've explained all of this in the market maker course, if we project 2 standard deviations lower, we get 1.04915. the actual low of this candle comes in at 1.04909. So 6 pipettes off the actual low over here. And in close proximity, these two red lines over here was the deviations that we got on the daily time frame. So we have an area of confluence. Look at the bodies over here. We consolidate below this low, and then we start the buy program of the market maker buy model, right? We have these consecutive down close candles over here. I'm ignoring this one, it's just inefficient price action. And these three down close candles, the opening price, when we run through that, we have our change in state of delivery. Why these three down close candles? Because these down close candles was the down close candles that closed below that sell side liquidity pool, right? You can see how we consolidated a little bit, ran back below the rejection block, the consequent encroachment of the wick over here, extend that out, you can see the body staying above that. We left this fair value gap over here, came back down into it, and then look at the reaction from this level. Now, before we even broke any structure over here, we ran through this sell side imbalance. So this is our early structure break, right? Yes, you can argue that there was lows over here, but because this was inside of a consolidation, I don't class these as relevant structure breaks. I'm looking at this was the manipulation leg, and I wanted to see this level be broken to give you confirmation, unless there's a sell side imbalance below that high. In this case, we can see it here. So when we run through it, this becomes as an inverse fair value gap. Yes, we did run through it again here a little bit on a closing basis, but this was just returning back to this order block. And you can see how we ran through that level again. This now acts as a balanced price range since we've run through that level and it's really done its job. So we would not expect, until the buy program is complete, we would not expect this level to be returned to, right? This up close candle on the left side of the curve, this is now you should know as an accumulation block. If we extend that out, you can see how we find support on the premium high of that accumulation block, which we retrace down into after breaking above this high. So this was our valid structure break, right? We have these two down close candles, which keyed off that accumulation block. We extend the opening price. You can see how we find support over here. And then we really make a run higher above the buy side liquidity, above this high, and rebalancing this sell side inefficiency over here. So back above the initial consolidation. And again, the analogy that I use of killing two birds with one stone. If we look at Tuesday's price action, you can see how we ran above this swing high over here and dug into this sell side imbalance. So we had IOFED. If we zoom here on Tuesday, you can see how we overlapped here inside of that sell side imbalance with this up close candle. We had our order block inside of there. You can see how we dug up into that, rejecting it. If we go down to a 15-minute time frame, you can see a little bit more detail how we ran back below this swing low on a closing basis. So this was our valid breaking structure. This left this sell side imbalance, and then we had this down close candle here as our distribution block. We had a high, low, lower high. So this was our mitigation block. And then below it is our distribution block, right? We dip into that, which overlapped with that fair value gap, which also overlapped with this balanced price range. So we had buy side delivery through here, then sell side delivery through here, which also sat inside of this high, low, higher high, which on a higher time frame is a breaker. So a lot of levels over here that are overlapping, and that really sends price lower back below these equal lows down here. So this is a market maker sell model which initiates the higher time frame market maker buy model, right? There is always a market maker model running inside of a market maker model. And if you know where you are inside of that market maker model, it just makes price reading so much easier, right? If we zoom into the 5-minute time frame, you can see how we made the lows down here straight after 12 a.m. We rally higher and then really drop lower. This is our Judas swing for the day into the London session. We then rally after London, making the high of the day in New York, rejecting from that higher time frame level, and then making the low of the day in London close. At the beginning of London close and the end of the New York session, we run higher into these two consecutive down close candles and into this refined sell side imbalance from the 15-minute time frame. You can see the reaction there, and again making the run back below these relative equal lows down here. If we take this high down to this low and we project deviations higher, 3 deviations gives us 1.06091. The very high of this candle comes in at 1.06091. So perfect price delivery there. And if we take this swing low to this swing high and we project 2.5 deviations lower, we get 1.05685. The very low of this candle comes in at 1.05684. So one pipette off, but look at the price action there. The body's again telling the story, failing to get back below this low. So very, very precise price action. And you can see how we have a market maker sell model inside of a larger time frame market maker buy model, and how the different deviations in price are still applicable, whether it's a buy program or a sell program. So again, it just goes to confirm like that there has to be some kind of an algorithm that really is booking price, because it's far too precise for this just to be random, right? So anyway, I hope you guys have found this one insightful, and I will hopefully catch you all again next week. Take care, guys.